Ladies and gentlemen, apes and ape bets, welcome back to the channel. It is time for an update on none other than AMC Stock, which is currently up 2.14%. We are coiled and we are ready for this breakout. That is at least what the charts and the overall price action is telling me when I look at AMC. Now, we're going to get into everything that is also happening today in the markets because, I mean, look at this cash open here. With the S&P 500, you're absolutely ripping, whereas stocks such as Amazon that just reported earnings last night are down 4.31%. This is putting a lot more pressure on the collateral that hedge funds are using to remain in their AMC short position. So we'll talk about that, as well as a major winner, FSLR, in the trading community. That is about 300% so far here on the day. And 300% gain. So congratulations to everyone that did hit that one. If you guys want to come join as well, link down below in the description of this video. Nonetheless, let's get into it with AMC Stock. Like the video, subscribe to the channel, all that good stuff. You guys know the deal. So number one, AMC Stock up 2.33%. I want to come back to the technicals in just a moment because I want to talk about what's causing this ferocious move right off the start with the markets, and it's this. The key inflation gauge for the Fed rose 0.3% in March as expected. So in this market environment, when it comes to data, when it comes to earnings, if it's just better than feared, it's good. Like expectations, that's perfect. Markets are okay with that. If it's under expectations by a little bit, we're okay with that. But as long as it's not a big miss, that's what the markets are worried about right now. And anything besides that seems to be very bullish. So if we look at what these numbers actually came in as, and which they're not good, granted, but it's not too far off of expectations. So the personal consumption expenditures price index, excluding food and energy, increased 0.3% for the month, in line with the Dow Jones estimate. On an annual basis, so-called core PCE increased 4.6%, slightly higher than the expectation for 4.5%, and down 0.1 percentage points from February, including the volatile food and energy components. Headline PCE also rose just 0.1% for the month, equating to a 4.2% annual increase, down sharply from 5.1% in February. That measure peaked out around 7% in June 2022, the highest level since December 1981. The headline number was softer as energy prices slide 3.7% for the month, while food costs declined 0.2%, goods prices fell 0.2%, while services increased 0.2%. Now, this is the part where if you wanted to make kind of a bearish case, here's where it would be. On top of, excluding food and energy from this PCE report, it was higher than expectations. That's also not good, but it's this. The employment cost index increased 1.2% for the first quarter, higher than the 1% estimate. So people are always fearful, especially over the last couple of months, about wage gains, right? People are like, this wage price spiral, it's coming, and we're always concerned about it. Well, it wasn't too good, the number that came out today. Right, 1.2% for the first quarter. You add that, what is that, 2.4%? That would be 4.8% for the full year. That's not really in line with what the Fed wants to see to get inflation down to 2%. So there is a little bit of good and bad here. Overall, markets are just happy that the data was not worse than what it could have been. On top of that, you're getting some rumors with FRC, First Republic Bank, that maybe the government is going to step in and basically rescue the bank, basically insure all the deposits, right? The same things that we've seen with Signature Bank as well as SVB Bank. So a little bit of optimism there. People are waiting for an announcement. It will come over this weekend if it is going to come. All in all, boil this all together. Decent earnings last night with Amazon. They kind of killed the rally, a 12% rally they seen in after hours, to actually go negative about 2%, which was insane last night because they kind of gave soft Q2 guidance for the cloud. And that's what people care about when it comes to Amazon. It is all about the cloud. So there you have that. Geez, FSLR continues to run down. That's a pretty nasty one. Now, with AMC stock specifically and the technicals and where we currently sit, all the good stuff. AMC stock up about 2.22%. Again, notice how some of your big tech is down, such as Amazon, and AMC stock is rallying. Now, some people were confused when I say big tech falling is good for AMC, or when the broad markets are higher, it can help push AMC higher. Some people are saying that I'm a perma-bull. Well, I tend to be pretty bullish, right? I tend to see things for what they are. Now, if the markets go higher and everything does well, then AMC tends to do even better. That's just the overall trend. But when big tech is down, AMC tends to outperform big tech. They tend to be green when big tech is red. That's just what I've seen as of lately, and I think that's why AMC has been so bullish lately. I mean, you're in an uptrend. It's slow, it's steady, but you're in an uptrend. And especially after yesterday, seeing that we broke above the 50 and 100-day moving averages, and now it's Friday, and you're seeing another 2% gain on top of that, that is a very encouraging sign. So I do think this is likely to continue, and I do think very soon we're going to be approaching that $6.57 range. So I do think there is a lot of potential with the options as well. I did make a trade on AMC that is up pretty nicely. If you guys want to check that out, also link down below in the description of this video, like I said previously. Now, let's get into some of the other things that are currently going on with AMC, such as the Ortex data, and we'll go ahead and refresh this to make sure we have the most up-to-date numbers, and it's currently looking like about $706.5 million worth of short positions currently on AMC stock. Estimated short interest of free float at 26.24%, free flow out on loan at about 36%, so about 10% higher than the short interest. Shares out on loan 185 million, days to cover sitting at 5.06. That's a very important number. Once shorts need to get out of their short positions, they're going to have a problem. Why? Because the utilization is 100%, and it has been for 18 months now. So on a percentage of the overall float, what is it, 533 million shares outstanding? There's not a lot of shares that can go around. Less than 1 million at any given time. That is a very small percentage of the overall free flow. That is why the utilization remains at 100%, and that's why the days to cover remains in the 5 ranges. You've seen this as high as 6% in the last 3 months, and I would expect this to continue to trend higher as people do tend, it's looking like people are getting more bullish on AMC stock, so I think that is a good sign. About 350,000 shares that are currently available to be lent out, with a cost to borrow rate of about 199% over here on Interactive Brokers. Some very good numbers that we're seeing. Cost to borrow average 339.2%, cost to borrow max 348%, cost to borrow minimum 332.12%. So you got some encouraging numbers over here. Keep in mind, these cost to borrow rates are making it unprofitable to be in this this arbitrage trade, really shorting AMC, buying APE. The cost to borrow rates are killing any potential prospect of seeing a profit here. We've reported on this many times now, but I think it's important that we all understand this. Each and every single day that continues to go from here until June 29th, you're going to see buying pressure in AMC stock from hedge funds. You're going to see them hedging out their positions, because odds are this is not done by the end of June. And if shorts lost almost $2 billion based solely off cost to borrow fees and are down over 400 million since the end of Q1 in mark-to-market losses, meaning the equity value of AMC has went higher since the end of Q1. They're down, I would imagine, from the start of the year until now, in that range of about $2.7 to $3 billion. There's only about $700 million short in AMC. You only stand to profit total would be about 150%, which would equate in a dollar amount to about $2.5 billion. So right now, hedge funds are at best break even on this total outcome of this trade At very worst, they're underwater by 25-35%. So that's kind of the way that I'm looking at this, and that's currently. Not to mention, if you continue to see AMC stock go higher over the next couple of months and weeks here. So it's not a pretty situation that they're in. It does not seem like you're going to get a lot of selling pressure from here. I don't see the case for a lot of shorting unless AMC earnings come in and they're just absolutely shit. Then maybe you get other hedge funds that step in here. But if AMC earnings are good coming next week on May 5th on Friday, that's going to be huge. Now, keep in mind, AMC does have this relationship with the markets. They tend to outperform on good days. They tend to outperform on bad days. And they tend to outperform when big tech outperforms. And I just mean AMC 8 tends to underperform when AMC outperforms as of recently. And next week, you're going to have the Fed meeting coming on May 3rd. That is going to be on Wednesday. You're also going to get some more important economic data next week and a whole lot more earnings. Like I said, including Apple, which is going to be really the dagger in the coffin for the markets. If Apple earnings are bad, Apple is just simply too much of a weighting of the markets. Apple is 7% of the S&P. Apple is 10% of the NASDAQ. There's only so much good that could come if AMC or if Apple does have bad earnings. So do keep that in mind for next week. That is going to be huge and could definitely affect AMC. Now, you're getting another bullish indicator here. You just got this back here, what was it, on April 25th, AMC broke above a key moving average, as well as yesterday, AMC broke above another key moving average, which is that 50-day moving average, and AMC actually broke out above the 50 and 100-day moving average. I believe this indicator back here on the 25th was AMC breaking the 25-day moving average. Correct me if I'm wrong there, but I think that's what it was after the hammer candle that we have seen. It has been straight up. It has been straight green ever since that hammer candle, and that was on April 24th, and likely does continue to the next level of resistance at the very least, which is going to be around $6 to $6.50 per share. When you do hit this ascending level of resistance, this is where we've kind of topped out ever since really March of 2023. You've topped out at this line every single time. Well, it's a lot higher now, so you probably got a lot more to rally with AMC stock. I do like the options here, but again, there is other ways to trade this as well. The RSI looking pretty neutral overall, which granted, we've had a lot of green days in a row. That's a very good thing, meaning that you're not really overbought here. It's at 57.74. Neutral is 50. Overbought is 70. So you're pretty far off of that. So that's looking good. The MACD is right on neutral as well. In the overall MACD, the yellow line is above the blue line. So that is indicating overall positive sentiment, positive volume. But on a, MACD basis, you got a lot of room to run as well. So a couple factors that obviously I am looking at here that do just show me it's a good time to be long in AMC stock, even after the rally that we have seen. Now today, last thing that we're going to cover is the option activity. You have seen 59,000 calls go into the money. Now you're looking at 108,000 calls out the money. You've seen a lot of calls go into the money. I believe like 30 to 40,000 here just today alone. Puts in the money 30,000, puts out the money 299,806, almost 300,000. So any way you put it, anything you try to look at here, shorts are getting screwed on their short positions. They're getting screwed shorting AMC, the cost of borrow fees. Literally everything is working against the shorts right now. And honestly, they deserve everything they're getting right now. So that is going to do it for this video. When we get new information, when we have a new update around 2 p.m., we will give you guys that. I think the markets have a lot of potential to move pretty big today. It is Friday. There was a lot of people that did trade puts yesterday, and it looks like the markets are in full squeeze mode right now. Thank you guys for watching. Hit the like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. You guys have a fantastic rest of your day, and I will see you in the next one.